Hello, Sudhir, my friend. You are an impressive human being to know for all my readers and inspiring entrepreneurs. There is so much to learn from you. Welcome to this interactive exchange of what not to do in entrepreneurship.
Thank you, Sanjeev. Thank you for having me, and thank you for those nice words that you had for me.
So, but they don't, everybody needs to know who you really are because the value of you is, of course, in the wisdom that you will share. But Sudhir comes out of course, an amazing school called IIT Kharagpur. He actually went into the same college called SIES
Correct.
in I went to in Sion, and then from IIT Kharagpur, he came here to you came to Urbana Champaign, or you actually went to a sort of school in from Spain or something, and private equity or Bronx,
Yes, yes.
some of that stuff. So please share with yourself. Please
I've
share.
done all those things, yeah. But rather than sharing my academic background, apart from my being from IIT and having done programs at Stanford and all that, what is really important for my introduction is I am right now a venture partner at Fida Growth Partners,
Yes, I was
and
coming to that. Yes,
we
go
focus
ahead.
largely we focus largely on scaling startups, taking startups from early to growth stage and scaling them. I am also an adjunct professor for entrepreneurship and innovation at San Jose State University.
Yes.
And, I come from India basically, but been here for several years, and I have done entrepreneurship both in India as well as in the US. So I have a background of entrepreneurship in India, and I have a background of entrepreneurship in the US also. And these days, rather than pull the trigger yourself, I'm helping others pull the trigger and standing behind them with the team, to make sure that I cover their back.
So, just for the people, you were an entrepreneur at a company called Soft Plus, which was a Zenith product company, and in 1997, you were given the Entrepreneur of the Year award by the chief minister, by the minister, union minister, yes, and obviously, then you decided because entrepreneurship in software was limited because of the concept of products in India, you decided to move in the 1998 timeframe when just the Y2K bug was about to be, sort of put together. You came into the US of course, to go to school and then become the entrepreneur following to that in the US, of course.
Correct. So I have to share something very interesting over here since you brought it up. Yeah, I, I used to work for companies earlier. So I worked for a while with some companies, and it was my goal to become an entrepreneur before I turned 30. Okay, in those days, turning an entrepreneur at the age of 30 was something big, because entrepreneurs were quite senior people, quite progressed in their life and so on. So that was a little too early for me to take that step. But that was the target I had set. Okay, and I don't know how I didn't know how I would move to that target. And I have to share the story with you. So what happens is hard work always pays off. Okay, so the company that I was working for, I was trying to bring a concept in India at that time of packaged software, because India was all about customized software development, and I was trying to bring the concept of packaged software there,
Products, like product.
product, right? Shrink wrap product, and and trying to deliver that on the microcomputers. Okay, the Z80. This is even before the PC came in, right? Intel 8080, 8088, 80286, 8086, all that family of Intel chips. And I got spotted by the chairman of Zenith Computers, and he said, Sudhir, this is very interesting. Are you free this Sunday to have lunch with me? So I said, yeah, such a big man calling me and trying
Of
to
course, of course.
call me for lunch. So I said, yeah, certainly, Raj, I'm happy to have lunch with you. So we had lunch together, and he said, I want you to start a company. I said, I'm not from a business family, so I don't know how to do it. He said, see, look, I'm behind you. We have this large company. It's the third largest PC maker in India. And I want you to start a software division because we don't have one. And it was as simple as that. So I said, yeah. So what do I do? You know, what is my title and everything? He says, you are the managing director of the company.
That's pretty good. Yeah.
He said, you can start Monday or as soon as you can. And that was my first step into entrepreneurship. It was like forcing myself into entrepreneurship.
You were thrown in the waters. Huh? You were thrown in the waters.
Correct, correct. You're
But
thrown
you
in the.
had an angel. But you had an angel.
Yeah, exactly. I had an angel there, who said, yeah. So, because I didn't know how to put things together, and, this was a little difficult at that time because, not understanding the ropes of entrepreneurship, how businesses are run, how money is raised, because, those days there were no VCs and, external investors. You had to go to bank for a loan. And when you went to bank, they wanted collaterals, and, you went through all that stuff and you couldn't figure out, how could you ever raise money and do business when you are so small and you're just getting started. So yeah,
Sure.
so a lot of things I learned. So that was my first entry into entrepreneurship.
But your passion of entrepreneurship, as you have stated, was to really use this methodology and apply it to a cottage industry in India. It's
Exactly.
right.
Yeah, it's my passion actually.
Yes.
This is my goal, that that this is my purpose left right now. Okay,
Yes.
that I want to do, and I've been working on a very interesting model there as to how this can be done. Because see, you have so many entrepreneurs here, who are funded. This is Silicon Valley. There are people at the bottom of the pyramid who are entrepreneurial. Who have the small businesses that they run. Now if they are given guidance and they are allowed to blossom their businesses, in a way that there is a method to the madness, it'll be such a rich experience for everybody. So that is my dream, and I'm right now working towards that, in some ways, to try to make that a reality.
So as you progressed into this helping the entrepreneurship world and in F, what does FIDA stand for? I mean, I looked in Google and there is lots of interpretations of FIDA. What was your interpretation in choosing the word FIDA?
FIDA, there are two reasons, but I'll give you one.
FIDA is it FIDA like the Indian word FIDA, which is profit?
That is exactly it. It is
Okay,
FIDA, but in US it becomes FIDA.
okay, okay, okay. I thought so, but I just didn't want to assume it because there are a lot of good interpretations of the
Correct.
when you Google the word FIDA. But now it is really FIDA, which is profit.
And
Yes.
the second reason for you picking that, because you can write FIDA in various ways, right? I can say FIDA, and there are various other ways of writing FIDA. But I particularly picked FIDA because it stands also for you DA. So DA is the short form for my son. He used to be
Oh,
called DA. So
I
it
see.
is. So it stands for you DA.
I see. Okay, 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 okay. So there is a tremendous amount of emotional value
Attachment to
to
that.
the stuff. So thank you for sharing that with us. I know it's a very sensitive topic, but thank you for sharing. One of the beautiful magical words that FIDA comes out with: product strategy, pivots, go to market, business models. All of these highlight words that entrepreneurs must know, must be associated with. And you bring that out in just the short summary of FIDA. So tell us, in short, your definition of entrepreneurship, because you have quite a different definition, including the difference between innovation and inventions. So please tell us that.
Correct. Okay, so that's interesting because, if you're asking me what's my take on entrepreneurship or entrepreneur, how do you get started? It usually is a trigger. There has to be a trigger. Okay, it may be out of frustration with the status quo, because you always say that there is a better way to do it, right? So why should I pay $40 rental to Blockbuster? There should be a better way to do it, right? That's Netflix.
Netflix, yeah, of course, yeah.
So it may also be a spark of imagination to create a revolutionary product or a service, in its own way. Okay. So, or you might be tired of a corporate 9 to 5 treadmill, and you are in search of some adventure and excitement. Okay. So there has to be a basic trigger, okay, that drives your passion. That yes, I know I have to step off the treadmill and try to do something. Okay, here. So that's very important. And apart from that, I think you have to be a person who has commitment or resolve. That you will stick to this through the end. You have to have a bit of contrarian thinking. You have to be some sort of a maverick, because conventional thinking is what everybody does, right? So I am a big fan of Edward de Bono, where we talk of lateral thinking. When people think in a particular direction, how can you think orthogonically, okay, to try to do something different? It might sound crazier initially, but that's what contrarian thinking is all about, right? And then you have to have that instinct to make to create your own reality, I would say. Okay, so imagine a world and make it happen. That is what I mean by creating your own reality. And obviously, there are other goodies, like you have to have high emotional quotient, you have to have self-discipline, because nobody's going to wake you up early in the morning. You have to get up on your own, get into your shoes, get to the office, get to the meetings, and nobody is going to keep your schedules because you lost your EA, as you became an entrepreneur. You have to have high energy, focus, so that is what I see as basic things that the person should have before he jumps in.
So
Okay.
therefore, the other side, the counter side, if what would be, what were some of the things that they shouldn't be doing to being an entrepreneur?
That's interesting. Okay, so so everything opposite of this you should not be doing. For example, you should not do conventional thinking at all, according to me. Okay, you should always be challenging things and say that I think there is a better way to do it. Okay, so for example, take the situation that we are in today. Okay, this is a crisis of a pandemic, global pandemic crisis. How would you look at the situation? One way is, oh, the sky has come down. Okay, what do we do? How do we survive? So that's one way of thinking, one attitude. The other is, this is a reboot or reset of economy. So I have an opportunity to do something new, something
Yes.
different that was not done before.
Yeah.
Because if you look at the impact, so this time, I can take you through various scenarios, the 2008 scenario and the scenario now, but look at the scenario now. There is a health impact, okay, which is giving rise to what we call as a low touch economy. Okay, this is reducing your mobility, constraining your mobility in various ways. Okay, this is constraining the rebooting of the economy, is delaying it. Okay, and all these things are having an impact on the behaviors of people. Okay, it takes only 21 days to form a habit.
Oh, habit. Right. 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 Right.
We have been in this for 5 months.
Yeah.
So
Yes.
we have now formed a lot of new habits. So if you look at the behavioral change, you look at the health imperatives, and you look at the economic impact, this is a fertile ground for
Fertile
discussion.
ground. It's like the world is flat now, and you can create. Everybody has to create new rules, and you might as well create it by yourself. The some of them by yourself. This brings me to the really an interesting interpretation of yours. I was watching you on one of your videos, your explanation to the entrepreneurs about the difference between innovation and in invention. And it's very important because everybody thinks because they're inventors, they are entrepreneurs. And I think it's really important for them to get that clarity from you. So
If you cannot commercialize it, that invention is no good. Okay, so a commercialized invention is innovation. Okay, and innovation, it need not be technical. So that's a misconception a lot of people have. Innovation does not have. There are 10 different ways you can innovate. Okay, you can innovate your customer experience. You can innovate your profit model. You can innovate your funding model. Okay, you can innovate your distribution model. So it is not all about the product. There are so many things that go around the product where there is a huge scope for innovation.
So is it important now in corporations you have inventions? And one of the things that you always speak, the difference between corporate and the entrepreneurial world, is this: is innovation and invention an element of corporate madness or corporate thinking? Is that sort of an element of that process? Would you consider that? Because then innovation becomes an element of entrepreneurship, right?
Correct. So innovation is absolutely an element of entrepreneurship, which is what corporates lack.
Yes.
I would look at it as three types of innovation, right? There is a core innovation, which is in the area that you play. There is adjacent innovation, that is, extending either your markets, the types of customers, or different sets of products. Okay, and there is transformational innovation, which is
Yes.
completely like the blue ocean innovation that you're trying to do. Okay, corporates are good at the core innovation. Okay, the product focused innovation that they are good at. Okay, everything else, they are not. So why did Kodak happen? Why did Blockbuster happen? Okay, these are very clear answers. Why did encyclopedia happen? Right, these are all very clear answers that people did not innovate in time, and that's why they lost. Right. So what is happening right now in terms of corporate innovation, I think they are realizing that we need to innovate, and we cannot innovate because the cycles of innovation are very different in the startup world and in the corporate world. Okay, and the 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 boundaries around innovation in corporate world are very different.
Yes.
Whereas in the startup world, it is boundless, right? It is exploration. Okay, there it is not exploration, it is execution. Okay, so those are the major differences. So you cannot innovate in a corporate organization where you have quarter to quarter delivery schedules, where you have half yearly financial
Yes.
targets.
Yes. Yes.
Cannot, that the yardsticks are completely different for the startup. So what these corporates are doing now is they are now looking at startups outside, okay, that they can bring into their fold. Okay, but there also it is not as easy as to pick up a startup, invest some money in them, and fold them in. It will fail.
Yeah.
Okay,
Yeah.
so
Yeah.
there are various models that I work with in this area.
Now
One
you work on, or you work with the entrepreneur, or you work with the corporations to engage the entrepreneur. Both.
both because I have in this situation I have to work with large conglomerates, okay, who are looking for this innovation. I have to
Yes.
work with entrepreneurs and then the
Uh-huh.
startups. I have to work with academic organizations and research organizations
Sure.
because a lot of this will be required, research will be required. And I
Correct.
have to also work with the financial organizations, right, the investor community. So and the entire ecosystem basically plays a role in it, because sometimes what happens is, I'm talking to a VC and he has a startup that could be of interest to my corporate client, and then I can connect the two and try to make those things happen.
So you believe in the equation of 1 + 1 = 11, huh?
Absolutely, absolutely.
Sudhir, one of the things that I admire about you through all these years that I have seen you both from and helping the entrepreneur is you're constantly transforming from the mentality of a controlled entrepreneur to a growth and exit oriented entrepreneur. Please share something, the thought process that is behind it, because it is quite critical for what I consider as the grit entrepreneurship. There is the glamour entrepreneurship that gets the unicorn definitions, and they never see hardships in their lives. And then there is the 99+%, what I call as the grit entrepreneurship. And for grit entrepreneurship, they at times forget that the value. So I want them to hear from your words why, in your mind and your thinking process, as you have outlined, that controlled entrepreneurship is not the game of the future as compared to the growth and exit oriented entrepreneurship.
Correct. So you will see that all these large companies, the unicorns and the decacorns that we talk about now, you know, there is a lot of control within the organization, which a lot of people don't realize. Okay, all they see is the glamour of the Hollywood outside. They do not know what goes on to make that particular film, right? So it's the same story over here. Okay, they see that glamour, but they do not see the frustrations behind the scenes that are there. They do not see those challenges and so on. Okay, so people generally try to you know pick those role models and think that they can also go that route, but that does not happen, right? And that's where a lot of failures happen. So if you see from my perspective, when the failures happen, why do they happen? Okay, and what can you do to prevent them? So most of the founders, they may have a fantastic idea, but they can't communicate that to you. So they can't articulate a value proposition which is compelling to the customer, to the buyer. Okay. And Sanjeev, this is very interesting for you to know that when we grew up as entrepreneurs, we did not have mentors at all. Okay, so we had to learn it the hard way, and the way I learned was there are 4 books that I still treasure today, which actually allowed me to get to that path. And what I'm going to tell you after that is all due to these 4 books that I studied. The first one is What They Don't Teach You at Harvard Business School. I'm sure you have also read that. The second book is Swim with the Sharks by Harvey Mackay. The third book is Positioning. That's all about marketing. And the fourth book is Tough Times Don't Last, Tough People Do. So
Uh, Sorry.
these 4 books basically gave me the ingredients to build a successful startup. So coming to your point on the growth focus that we have now, see, a lot of startups will fail initially, and that percentage is about 96%. Okay, because they don't get to a product market fit. And why they don't get to a product market fit is very simple, because people just jump in because of passion. They are not able to visualize the road ahead. Okay, so those are the kind of people who think that passion is the only thing that is required to be successful. So those people fail. It is not about passion. It is not about the product. It is all about how are you able to build a business out of it. And if you can't do that, then you fail. Okay, so some people fail very early. Okay, but those who survive, there is a hope. These are the people. Why I pick those people is because they are coachable. Okay, the if you pick up somebody who is on a drawing board and who is on the first PowerPoint, they are not coachable, because unless they talk to 30, 40 people, and understand what they are doing wrong, and you don't have so much time to waste, right?
Sure, sure, sure.
You look at somebody who has achieved a seemingly a product market fit, but he's struggling. He's not able to cross the chasm, right? Or he's not able to ride a tornado. In a B2C world, it will be riding a tornado of virality. In a B2B world, it will be crossing the chasm to a mature market, right? And that is where you can come in with a lot of toolboxes,
Yes.
that can help
So,
you.
so that is my next question to you. Since you have the toolbox for entrepreneurs,
Right.
what are the 5 tools of value would you suggest for the next generation of entrepreneurs?
So one thing is the value proposition tools. Okay, if you cannot communicate what your product is capable of doing, how it is going to help the consumer or the customer, you don't have a business. Okay, so my first thing is get down to a value proposition tool. I go as much as uh, going through Clayton Christensen's process of jobs to be done. Okay, what is the basic job to be done? Okay, somebody wants to go from place A to place B. That's the job to be done. Now there are various ways to do that job. Okay, what is the way I'm going to help him do that job? Why? Who is my competition? Okay, so a lot of these things founders don't get it easily. For example, who's the competitor of Netflix? If I ask people, they will say, okay, video rental store or cinema hall. No, Netflix is into entertainment. Okay,
Right.
their competition is everything on
MS,
entertainment.
yeah, yes, yes.
Okay, so then then there is a difference between stated preferences and revealed preferences. Okay, if you ask somebody, that, okay, I'm designing an aircraft, what would you like? He will say, I want extra seats, I want this extra space, I want nice entertainment and stuff like that. But those are stated preferences. The revealed preferences may be completely different.
Correct.
Okay, so if you ask a young millennial or Gen Z, they will say, I don't care about the space or anything. I just want a, something comfortable at a very low price.
Yeah,
Okay,
yeah.
that's it. So that is a revealed preference. And how do you get to revealed preference? So you have these value proposition tools that will allow you to craft the right value proposition. And basically, the whole crux of your product strategy is embedded in that value proposition. Okay, and then it goes into your messaging, your how you communicate that, your branding, and so on. Okay, so that's one. How does it resonate? How can you substantiate? All those things come into that value proposition. The second, of course, is the business model. Because you have to understand what are your channels of distribution, your customer success, your operating model, who are going to be your partners, what location are you going to pick. Okay, and what algorithms are you going to pick. We are in the world of algorithms today, right? How is your unit economics going to work out? It may not work out today, it may not work out tomorrow, it may not work out for another 3 years, but you have a path to unit economics that is laid out. As your volume picks up, you are going to get there. Okay, the third tool, obviously, you have said that earlier, is the innovation tool. Okay, you need to have a strong innovation mindset because it's an ongoing process. Okay, you have to be on the edge all the time. Okay, and keep innovating, because moment you try to ignore that, you'll be dead. Okay, so because the world is moving so fast. The fourth tool, I would say, is a go to market tool. And that's, again, a lot of people fail over here because people don't have an understanding of what is go to market. They think go to market means marketing, and that's not true. So this is a complete strategy, right? You build a strategy. How are you going to get your early adoption? How are you design your beachhead markets? How are you going to look in terms of penetration, expansion, your pricing? And so on. Okay, so that's the go-to-market tool. And the fifth tool, I would say, is the sales process tool, because ultimately everything boils down to whether you are able to sell. Okay, so what sales process, what playbooks are you going to create? Because you want to build a replicable organization, right? You want to replicate people, through processes. So how are you going to do that, right? So you're going to do that through some playbooks, some funnels, that will help you understand where you're going wrong, what you can do to fix those, and so on. So those are the five tools, I would say.
Thank you for sharing those. Sudhir, um, you've had some amazing heartfelt experiences in this journey. Can you share a few that truly changed you and your thinking or the vibrancy that is now you?
Yeah. So here I've been watching one TV serial on Alexander the Great. Okay. So he was marching in one battle, and his soldiers were not willing to go, and they were crossing a bridge. What did he do? He burned the bridge so that the soldiers could not go back. Right? They had to fight to
Yeah.
win. Okay, so that is one thing I did in life. Okay, and that's a story I'm going to tell you. Okay, so I built a product which is an office of productivity software for executives, basically. So it had calendar, time management, attendance book, to-do list, follow up, a whole lot of things for an executive to be productive. So the logo was the power of working smarter. Okay, so this is something I learned from time management, and I said I can package this and sell this. Okay, so I had to launch this. Now imagine I was coming from a B2B world into a B2C world.
Yes,
Okay,
yes, yes, yes.
and I had to launch this. And at that time, I was also advising a company which was into computer education, and that was a B2C model, right? And we were splurging money on advertisements. We were talking to top class. We were coming on the front page of the newspapers and so on. Okay, so now newspaper is dead, but you
Yeah.
know, front page newspaper is a total visibility, right? You will get. So that is where my learning occurred. And when I had to launch my product, I said, how do I do this? Okay. So I did my initial mailers and all that to people, and I started, the orders started coming in slowly. But I said, this is not the volume that will allow us to sustain, right? So we need to build a bigger volume. And how do we get bigger volume? I have to have a massive reach. How do I reach massively? And in those days, there was no internet.
Correct,
Okay,
correct.
was the print media. Okay,
Right.
and I decided to put a full one-page ad in one of the top business magazines at that time. Okay, and that would cost me a fortune. Okay, but I said I'm going to do that. So I had invested in a house, and I had to sell that house.
To get that.
Okay. So I went to my family and I told them, say, look, this is something I want to do because I'm very sure that once I put the ad, things will happen. And they said, say, look, that's the real estate, that's going to grow, that's going to appreciate, and what will happen over here. I said, no, I do not want to feel sorry later on that I could have done this and I did not do it. Okay. So I just want to do it. Okay. And you see, I'm a very bright boy. I'm from a good school. I have no problem getting back to a job and just restarting my life.
Yeah.
They said, okay, why don't you go and do that? So I just sold that house, put that ad, and that was history. Okay. I won the national award for that product. I won international awards for that product. I started coming on front page of the newspapers and all these interviews when I was very, very young, right?
Yeah.
And and so it was like burning the bridge, right? So
Yes. Yeah. But,
go back now. I
right,
have to
right.
fight and do it, right? Because
Right.
the house is gone.
Yeah.
Okay.
Yes.
So
That's
so I don't tell every entrepreneur that you should do that, but that is what that shows your confidence in what you're trying to do, and it is always your confidence that carries you through.
correct, correct.
Because once you have the drive and the desire, you will find the way.
Correct, correct, correct. And especially when things are constantly in a change mode like that, and you knew what the outcome potentially would be. It could have gone, of course, the other way, and obviously, but you know, at least you knew that more people would call than not. But that's good. What's the second one, if there is one? What was the second one? I asked for a couple. Very interesting.
Yes, the second one was very close to my heart. This is my son passed away in 2014. Okay, and you know, while uh, after he graduated from UC Davis and he got a job in Lockheed Martin, right? And he had this desire to do a startup on his own at that age. Okay, so he used to go to uh, Castro Street, hire, interview CTOs. So I'm trying to talk to a CTO founder and so on.
Yeah.
So I started sharing things with him. So I said, you can do things like this. This is how you can do. And he was a very potentially good entrepreneur material that I saw. And he was wanting to do something on his own, right? He used to go from the money, pocket money that he had, he used to go and buy some sensors and bring them and try to put them together and stuff like that. And he had built a business plan also. Okay. So when he passed away, uh, at his funeral, I saw a ton of his friends there. So I said, these are all the boys here who can become good entrepreneurs.
Entrepreneurs, yes.
So I wanted to dedicate myself to building those young entrepreneurs. Okay. So it helped me in two ways. One is, you learn a lot from this young generation. When you talk to millennials, when you talk to Gen Z people, their
Sure.
perspectives are very, very different. Okay, so there is a lot of learning that you do, and there is a lot they learn from you,
Of course.
as what you have seen in life, right? So it was mutual, and that is something that helped me build this fancy frameworks that I keep talking about,
Sure.
uh, because I wanted to present it to them in very simple terms, right? I didn't want to complicate, so rather than writing a thesis of 1,000 page books, I wanted to have a quadrant, or I wanted to have a certain and explain this concept to them. So that's where I started building these frameworks, which
Yeah.
I
Well, I loved your thank you. By the way, I know about your son. At least I share the passion and the grief and the stuff because I had known him through because of you. I saw one of your illustrations where the entrepreneur is looking under the light for a key that he has lost. He doesn't know where, and it's quite a picturesque way. Maybe you can put some light on that angle of a lost entrepreneur or something in that manner, which that image can, because you were talking about this in a quick demonstratable way. I wanted to bring a picture.
yeah. So yeah, this is the curse of knowledge, as I call.
Yes, the concept of knowledge. Yes,
People, why people are not able to innovate is because of the curse of knowledge. The word curse of knowledge is used in various ways. So my definition of the curse of knowledge is as follows, right? You have learned something in the past. You are carrying a baggage. Okay, you have to get rid of that baggage in order to innovate. You cannot innovate unless you get rid of that baggage. So the
right.
person who's looking for his keys under a lamppost, so a passerby asks him, "Why are you looking at your key here?" He said, "Because I lost my key." He says, "Yeah, but did you lose it here?" He says, "No, but there is light here." The light signifies knowledge, right? That's
Yes,
the only knowledge he has. That
correct.
is why he's searching there. This is like the classic story that Swami Vivekananda talks about, frog in the well. Okay.
Right.
Are you a frog in the well, or are you a frog in the ocean?
Right.
Okay. So that is the difference. So if you are myopic, you can never innovate. And that's what uh, working long years in corporate organizations,
Create.
try to put these boundaries around your knowledge. Okay,
Correct.
become
But it is a very valuable lesson, Sudhir, for all entrepreneurs, right? What they are in different ways. You can say to them that you need to connect more dots
correct.
outside your field of expertise in order to create the higher probabilities of success,
Did it so well. Yeah, you have
right?
to connect
So,
dots
so
outside your field.
they're the
Right.
outside the stuff. One of the things, Sudhir, and you are pushing and doing everything you can, and watch all of the things that sort of you speak about, is guiding them, guiding people what to do, guiding watch aware of the stuff. Global entrepreneurship is expanding, but the percentage of success of entrepreneurs needle is not moving as much. So even though I want to make that needle move, for logical reasons, entrepreneurship stays to be an art success, and we are working towards creating it a probability of more of a science of probabilities of success. What in your mind will create that shift of the needle from being, like you said, 96%, 97, those are just numbers. Do you have some thought process that entrepreneurs should look at and say, wow, the needle can be moved, and I don't want to be on the 3%. I don't want to be on the 97%. I want to be on the 10% side, if I can expand, that would be very valuable for people to learn from you. What would that be?
So I do that quite a bit right now, okay, with a lot of startups. Why do 96% people fail? Because most of them shouldn't have been there in the first place. Okay, that's why they fail. So they are not. You can see a deck, because after seeing so many startups, I have become like a pattern recognition machine.
Artificial intelligence of it also.
Once I go to the slides, I say this is not worth it. This is not going to go anywhere. Okay, but it is very hard to tell that entrepreneur because he will not buy your thought
He or
process.
she, by the way.
He or she, she will not agree. She'll say, okay, man, this is one of the feedback, and there are many other people who have given me different feedback. So that's one impediment, I would say. Okay. The second one is the quality of mentors that are floating around these days. Okay. So because being an entrepreneur is so easy, you just need a laptop. You can get started and do your own coding, and find somebody who can do your marketing, and you can launch something, a website or an app or something like that. It's become so easy. You remember in our days it used to be tough, right? We had to invest significant amount of money in buying the servers.
Yes.
Okay, it was huge money, and that is where that used to be our Series A, right?
Yeah. Right. Right. Right.
All these machines and all that. Okay, so that is all gone right now. Okay, so that's why there are more people coming into entrepreneurship, and which is good if it is regulated properly. If they're guided properly. Okay,
Guided.
so I would not call them entrepreneurs unless they have a strong value proposition addressing a market, and that is accepted. Okay,
So that's
then
that. Yeah. So what you're saying is the number may be increasing, but because you don't have a qualifying filter in the
that
entrepreneurship, the number, the odds remain the same. So now this is sort of my last question to you. Of course, I give you an opportunity to ask you a question. You are one of the most knowledgeable people in sources of capital. In today's world, it is, I call it the abundance of capital world. And entrepreneurs always struggle, like you said, between control and source of capital. Uh, could you share some of your thinking on choosing what you would consider as a right source of capital, if there is one, or what would be the criteria for them to choose a particular source of capital?
Yeah, so first thing is what I tell entrepreneurs is, defer an investment raise as much as possible. Okay, so you want to build something substantial so that you have a significant value when you are offering to an investor. Okay, don't go and settle for an investment at low valuation. Okay, so which means go show your product market fit and say that I need money now to scale. Okay, so money is the only thing that is stopping me. Then you will get better terms. Okay, so that's one. The other thing is there are various ways to fund startups. Okay, people, here what I see is moment an entrepreneur starts his journey, he's got some friends and family. I want to talk to this VC, I want to talk to that VC. VC may not be right solution for you. There are so many other solutions available. Okay, and for example, if you're a biotech startup, there are so many grants available. Okay, I'm working with a startup which is on liver. Okay, cirrhosis and all that, and we raised 2 million from the government in UK. Okay, for that. Means the entrepreneur would have actually thought that I would go and try to raise money from VC. This is non-dilutive source of money.
Non-dilutive capital, yeah, yeah, yeah.
So there are various ways. There is revenue-based funding that is possible now.
There is licensing-based, intellectual property-based funding.
And why do you have to go for equity all the time? You can do a leverage between equity and debt
Yes,
properly. Okay,
correct.
and, so they don't understand this, right? So they need that guidance, or they need something very simple. Like for example, what Y Combinator did was convertible debts. They made it
Yes.
into a safe note, SAFE,
Right.
super for future equity. Okay,
Right.
so somebody comes with a format like that. Okay, I will give you this funding, but it is debt come equity, and this is how it is balanced.
Right.
Okay, people will be willing to do that.
Sure.
Okay, because he's not losing too much equity there. At the same time, he's taking the risk of the debt also, right?
Sure.
So
Sure. Sure.
you could do that, but you know the young entrepreneurs do not know, but at the exit time, how much do the founders have left? Tell me.
Oh, that's right.
They
Right.
don't,
Right.
they don't have left more than 10%, 12% or so,
If
right?
that, if that, if that, right? If that.
And
So,
if there are liquidation preferences, what are you going to
yeah,
carry home?
what are we going to get out of? Yes. Yes. Yes.
Which are very strict liquidation preferences, and which is what is happening in
Yeah.
today's market. What will you carry home? You might have on record, I did a 200 million exit. You did not carry home even 750K.
Okay. Yeah. Yeah. That's horrible. Yeah.
And that too came as a bonus, not
Yeah.
as an equity.
You're right. 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 Right.
Equity was taken, right?
Yeah. Equity was cleaned up by the other side. Yes. Yes. Yes.
And the liquidation preferences.
Yes.
So I think there is a need right now, there is abundance of capital, okay, but that capital does not get deployed properly,
Yes.
and there
Or
are policies.
sources of capital do not appropriately resonate with the need of the instrument of the need of the capital, right? Because there are various sources of capital that the entrepreneur can create a resonance between the two.
I think somebody comes up with a mechanism,
Yeah.
of keeping the entrepreneur completely oblivious of the sources of the capital. But this is the instrument that you
Yeah.
understand, and I'm
Yeah.
going to help you with this instrument. I think this venture industry can be disrupted in many ways,
Yes,
right?
yeah. But I think, Sudhir, just as a comment from my side of it on the same thing, it is the glamour side of the announcements that, oh, Snap world for $2 billion and so many VCs, and so they assume that the founders made money, and it's very difficult for other people who are outside to see what the reality is, because everybody thinks that theirs would be an home run when you can make good amount of monies in the singles and the doubles,
Exactly.
and create returns. So did I have asked you a lot of questions? I would love to give you an opportunity for you to ask me a few questions, because it has been such an amazing learning from, of course, me. It is always is from you, but from all the people that who would read. So please, use this opportunity to ask me any question you want.
Even asking you a question, I think, Sanjeev, I want to request you, that if you can put some mechanism, for funding of startups, which is completely different from what we see today. I think a lot of VCs also understand all that. Okay. So you want to put a mechanism which not only gets them fund, okay, helps them operationally flourish and succeed. Okay. So you want to create a whole package and give it to them. Okay. So right now, why do I go to the VC, right? He can make a few calls, he can connect me to some people, you know. That's what I bank on. Rather than that, I would like to have somebody, who actually gives you an operating partner who spends significant time with you as your team member, okay, fractionally, okay, and adds value there, from his experience and everything. And on one hand, he is making sure that the capital is utilized properly, that the investor is invested. On the other side, he's helping the startup flourish. It's a win-win for both.
Yes.
It's a win for both.
So I do want to respond to that. We did create a structure, what is called as integrated capitalization.
Right.
And integrated capitalization works from the stage of the initial convert to the stage to the level of 24 to 36 months, where you can then get the next level of capitalization.
Wonderful.
And if the integrated capitalization sources coming from private wealth, do not expect home runs, but 2 to 3 times returns in their 36 months. I put 36-48, but it's actually good to state 24-36 because they always become 36-48. And they do include a part of the first round of capitalization integrated with the second round of capitalization in a roadmap of execution, which you call as operational execution.
Right.
And that allows the founders to see how they seek the use of capital on a risk mitigated roadmap agreed upon between the capital sources and the type of the entrepreneur's needs. And it has to be risk mitigated because you don't want to take a high flying risk in these things because it's private wealth, but their returns expectation being reasonable 2 to 3 times in a 36 month, one can roadmap it and allow that capital to flow quickly, allow that capital to flow measurably, and allow that capital to have the next round of the growth exit. So yes, so we have, and I'm happy to share that with you in a term, we call it integrated capitalization. You can call it anything you want, but happy to share that with you, including the sources of capital that want to participate in it. And so there's someone like you who has the understanding of the word, of the dimension of that transformability from a startup stage to coming to the growth exit stage, because this cannot be a mezzanine capital. It has to be in that interim period of time.
Exactly. And I
So
think, this is the time for it.
this is the time for it. So let's talk more about it.
A lot of things have changed.
Yes,
Investment paradigms are changing now.
investment paradigms have changed.
Could not be a better time.
Yes, so let us continue that conversation. Happy to share with you, Sudhir. Thank you so much for
Thank you,
being
Sanjay, for
so
having me.
generous with your concepts and sharing. And I know how tremendously passionate you are, and that's what I loved about having to interview you in this. And may you always succeed in creating phenomenally successful entrepreneurs. Thank you so much.
Thank you, Robert.